All right, guys, we'll pop on here live, the Independent Investor Channel. My name is Ryan. We're back for another Friday of investing discussion. For anybody that is in the channel, the group here, you're welcome to make yourself on to kind of the pre-show a little bit. I really enjoy the discussion before. It helps get my diesel engine warmed up for the live stream every Friday. Not that I take a whole lot of motivation, especially in times like this. Certainly reaching for those right words to push out to the community here. Obviously, I certainly do want everybody to benefit from what's going on right now, and I'm not necessarily speaking about the right hand of your accounts. Obviously, there's been quite an aggressive drawdown in the stock market, but I'm a funny guy, man. When I pay attention to what's going on, it's amazing what keys me off. And I'm actually extremely encouraged by a lot of things that are going on right now. I think being ill prepared, I think we can all somewhat agree on this. And to everybody's defense around the world, how do you prepare for something like this? You really want to go about your daily lives. And I think most people really do. If they have good health and security and safety in their lives, I think most people are relatively happy. And if you do have that level of hope, I guess, in your life, it really gives you that opportunity to seek out leisure, go on vacation, go out to restaurants, things like that, things that we absolutely do without any hesitation. And I did see that there was a comment to the group that perhaps maybe life kind of going forward, when we get to the other side of this particular event that's going on right now, perhaps maybe that will it will impact us for the long term. And I'm really trying to understand how we can come out of this, not only better people, but better investors, absolutely, but better patrons as well. Of this world that we live in. Honestly, I do think this thing came out of nowhere. It really did. We certainly do prepare for any unforeseen expected condition in the stock market, but this drawdown has been one of epic proportions, quite frankly, and it will test any seasoned investor, and especially investors out there alike who are perhaps maybe got involved in the market over the last couple years, 1 year, 6 months, who knows? We really do try to revolve around the idea of investing being one of those things that are extremely rewarding. They really are. The investing opportunity and the ability to become a participant in the manner that I revolve around all the time, the method by which I seek my exposure to the market. For those of you who don't know, I am a self-directed investor. I do not seek my services from the hedge funds, nor do I seek my services from the likes of the financial planning institutions anymore. And to each his own on how you seek out your exposure. But I think it really is the fundamental backbone of the message here on the channel. We really do insist that it's not necessarily the stock makeup in your portfolio. It's the nature by which you seek out your exposure that means a lot. And there are differing varieties of who you're seeking out in way of using as a third party or a shepherd through not only calm times, but maybe maybe the financial planners are getting wrung off the hook right now, getting inundated with calls. What did you get me involved with here? But nonetheless, I do think we've got an awful special community here. I will attempt over the next 2 hours to really drill down. I'm doing a midweek Monday, to be specific, a kind of alert live stream, and I did one the beginning of this week. It was a fairly impassioned message. I'm a little bit more even keeled on my Friday live stream. I typically try to drive to the root or the pulse of the market on those Monday live streams. And And I think that's for everyone's benefit. I do think that we can be constructively critical of what we're trying to do, how we're trying to do it. But there's a difference between being constructively critical and being downright rude. It's really interesting to me seeing some of the dialogue. I'm more excited now about being an investor than I was in January. Okay. And let me shed a little bit of light on what I feel like. I know with the violence in the drawdown of this, how good it's going to feel on the backside when we start to see that light at the end of the tunnel and we emerge stronger and we're allowed to take a little bit of a breath as an investor. And I think for a lot of new investors, I think they can't probably get that reprieve early enough. I thought today potentially the market action had a slight potential in the morning. Today was a triple witching day, so heavy volume with a lot of put contracts expiring today. So not necessarily a whole lot of help in that regard. And I think a lot of hedge fund managers and money managers alike really don't like to have carryover with the possibility that a lot of news can unfold over the weekend. Okay, so I think that probably drew down the market. 20,000 was my base of support. Obviously, that's moved down 1,000 points. It's amazing how these 1,000-point moves really, good grief, in a good market, it'd take us months to move through 1,000-point day. And here we are moving through them in a matter of minutes. So the market action has really been unparalleled, quite frankly. There was some comparisons today by Ron Insana, who used to run CNBC, a little bit more involved in the day-to-day operations. Now he's a senior market analyst, but he had to go all the way back to the actual market crash of 1930. Is that correct, guys? I think somewhere around there, into the 30s, it was the great crash. And some of the similarities that are showing in this particular offering now, and some staunch differences as well. I do believe that we're probably a lot of players in this community for sure that are sitting around the blackjack table who have every knowledge about how to play the game correctly. But there's probably 5 people that are sitting at the table who are ill prepared for a drawdown like this. And, I'm not one of those folks to say, hey, you should do this or you should do that. But panic selling is probably not in anybody's best interest. And I would be one of those interesting folks. If I heard that over and over and over again as a cliche, I would sit back for a second and really hear somebody out. And I would really understand that if I was going to step into this investing game in any capacity, that I would understand what that means. Okay. Because it's easy to say, yep, I got it, Ryan. I understand. I want to become an investor. I'm awesome. I know what I'm doing. And then you come across volatility like this, and it just doesn't seem so awesome anymore. Well, the rules apply the same as then as they do now, okay? And these are rules that are unbreakable. You can't break these. And I say that tongue in cheek, understanding that people day in and day out by the thousands are liquidating their full portfolio, that of which is a move I cannot understand, guys. I cannot wrap my mind around it. You will never, ever hear any type of lingo that strays from that type of rationale. There is a right way to invest in the stock market, and there's absolutely a wrong way. And liquidating your portfolio now down over 10,000 points on the Dow Jones Industrial Average. We did blow through somewhat of a technical support level in the S&P 500. I think that was part of the reason why we just kind of hit a free fall and an exacerbated sell-off at the end of the day. However, what has been done has been done. I will not attempt to call a bottom. I don't typically look at calling a bottom in any single stock either. I did see some interesting support levels today. There are some bargains across the board. And I'm going to give you guys kind of a small spectrum of scale that helps me a little bit. And if you guys have tuned into me for a while, you know that I deploy this strategy. So on a scale of 1 to 10, I typically would look at the market that we had in January as a 2. Okay, so the closer that we get to 1 is kind of where we're looking to be. Okay, a 1 being a market that is at or just below an all-time high. Okay, and I would rate that level of market a 2. And this really comes with when I get hit with the question, I've got $1,000, Ryan, I've got 5,000, 10,000, what do I do? And that's where the 20% example came from. Okay, so all you have to do in a market of a 2 is add the 0, and 20% could be a good starting amount. This is a question, a fundamental question that I get hit with all the time. And this helps a lot. Now, with this extreme market, I would rate this an 8 out of a scale of 1 to 10. A 9 or a 10 means that you've actually pegged the bottom of the market. So I don't think that it's very realistic to think that you're going to get a 9 or a 10 optimal stock market to buy in, but we're awful close. We are awful close. And like I've said and stayed steadfast on my program, if you were a new investor stepping into this market with $1,000, you can invest it all, okay? With my rule, 80%, 20% to cash, if that's what you want to do, we'll abide by that spectrum rule, basically, kind of one of my rules of thumb. But you'll see me rotate back and forth on this spectrum. The rule of thumb historically has been invest what you can when you can into the stock market, okay? And don't lose sleep over it, okay? The idea between that spectrum is understanding and acknowledging maybe that you're stepping into the market at the end of a 13-year bull market, and maybe you just want to invest with a little bit of scale, all right? So that'll help a lot of you guys understand the deliberation that I'm going through right now, because I really do sense a lot of tentative questions to me, like, hey, man, I really want to buy here, but good grief, is it okay to buy? Yeah, it is. It is okay. There's some multi-year lows. You've been given back years. Okay. I would stick to quality. All right. I'm going to disclose some of the buys that I've made actually today over the live stream. So I'll share those with the group. Some of them controversial. Boeing, for example, I can take as much heat as you guys would like to dole out. It's a small company. All right. They make airplanes. Okay. But I did take a strategic shot at Boeing here, sub 100. Seeing some support technically with some of the leverage that I see in helping them bridge what I think they need to bridge to the other side, to their government contracts and their commercial backlog, I think is the key here. Now, I could be dead wrong, and make no mistake, there's some risky stuff, but from a relative perspective, I think the remaining risk with the cruise industry and with the airline industry is worth taking a strategic shot here. And I've bought those in my taxable accounts, which will force me to be long the stock anyway, as the work in the individual Roth accounts are done. I don't even need to look at them anymore. And if this market continues any more south, which I think is a possibility, I actually think we're going to get into a churn phase in the market. I really do. I think the violent downturn is basically priced in a recession. And I'm not going to say rightfully so. It's just that's what's been done. Okay. There's no arguing that. And here we are. What do we do about it is the question. I do have Kyle with the Passive Income Investor channel. I typically like to do my opening for the group and kind of address and set the stage. But I'm going to bring in Passive Income Investor. He's going to stay with us as long as the time will allow, and let him to offer his comments, as well as I do think 2 or 116 perspectives on this market will probably benefit the group. Okay. So without further ado, I'm going to kick on Passive Income Investor, and I will try to go through and do the shout outs for the channel creators here. So, all right.
Captain Ryan, first of all, thank you so much. You've been such a calming voice through most of this insanity. It's actually been really, really nice. But I'm definitely one of the people experiencing this to the full extent now that Canada's on pretty much full lockdown like everywhere else. I've lost a ton of work going into even as late as May. And now I'm hopefully going to get some clients back later in the summer, but it's becoming a bit of a disaster here. Awesome. But at the same time, I've pretty much bled out through most of the cash I'm willing to invest. So I'm just kind of reinvesting the dividends at this point. But luckily, a lot of new people have gotten interested in investing. So I've been helping my parents out, my girlfriend, and we've been picking up stocks like crazy over the last couple of days. Obviously, we don't know where the bottom is, but when I'm looking at some of the ratios on these stocks, like it's we're not talking about, like, I got some REITs pulled up here, some that I already own, like RioCan, and I just can't get over the fact that like RioCan's underlying asset value is worth something like $8 billion, but the market cap on it right now is at 4.8 billion. I mean, there's so many companies out there that are being valued as though they're going to be bankrupt next week. And it's just not the case, especially in REITs right now. Like, there's so many that are trading at their 2009 lows. We're at some interesting endeavors right now, that's for sure. But holding up, man.
I looked at Realty Income. It went all the way back to 2018 at $45. My entry was a little bit more than that. It took a dip today just for a few seconds. Honestly, buying these stocks, I don't know if you've noticed now, through the volatility is very tricky, very, very tricky. You really just got to pick your price. I think limit orders now is probably in your best interest. I typically trade on market orders. I've been very successful doing that. I may give up a few bits of appreciation or depreciation by doing so, but in calm markets, I can do that just fine. But man alive, even with Boeing, I did put a market order through, and it actually working out to my favor.
Oh, really?
It went through really nicely. Yeah. But Realty Income was one that I picked up today. That was a Gen X dividend investor favorite who's in the group, who's done a deep dive. I did my own research on it and liked what I saw. I actually think it may get some buying interest because of rates being all over the place. So you get your monthly 5%, and I think that may draw a lot of people in, and the entry you can't argue with right here either. So.
Yeah, I think it's just I don't want to tell people to rush into everything either, but honestly, if you can cost average into these right now, I don't think you're going to do wrong over the long term. But there's so much out there. I mean, you could throw a dartboard at pretty much of these top tier companies right now, and I don't think you're going to do terrible over the long run. But the problem is we don't know how long this is going to last, and right now it's just the prediction game. And it's historically bad times out there when like anybody with the slightest bull thesis comes on to CNBC and they just get tore apart. It's, you're in the midst of everything when CNBC just picks one narrative and they run with it. And I love watching it right now because I don't know, I'm probably more relaxed.
They defended themselves. They defended themselves and said they're not doing that. I call BS. I like CNBC, but people would be surprised at what I pay attention to on CNBC. I really do. I watch it for the ticker tape, to be honest with you. And because I do read the ticker tape. I'm interested to see the price action and a lot of names. Some of the interviews have been good. Obviously, the title of this live stream tonight was referring to the comments from Mr. Ackman, which I've never really been a fan at all personally. I think there's been some historically bad trades that he owns. And
are you talking about Bill Ackman?
Yes.
Yeah. Bill Ackman.
If anybody wants to. He got some serious blowback for that interview that he gave on CNBC, actually, and then actually made a phone call to the executives of Blackstone Group after, because he was calling out some specific names, that of which Elon Musk got smacked with from the SEC for doing that. And I thought it was really terrible. I thought it was really ill-tasted. I can deal with the market reaction to that interview, but the striking fear and not understanding the responsibility that you have. You may feel that way. You may really believe that Hilton is going to zero, but you don't make those comments on an interview. I do highly recommend that you pull it up on YouTube and watch it. And you'll feel the same way as me. But the thing about it was, like, he's invested in Hilton. So, it's just ill. There's certain things that you don't do, especially in that position when you run a hedge fund like that and you have a responsibility to your clients. I wouldn't want my investor out there spreading stuff like that. With what intent? I don't get it.
I definitely got to catch it. I'm a big fan of Bill Ackman. I remember watching. He's got a video on YouTube that I recommend if you're new to investing. Definitely watching is the lemonade stand balance sheet breakdown. Brilliant. But I remember he had me this close to purchasing Valiant Pharmaceutical back in the day because I was so obsessed with that guy when he was fighting with
talking about.
Yeah, when he was fighting with Carl
Carl Icahn.
Icahn. And
Yep.
yeah, I used to admire the guy, but he kind of reminds me a lot of like Kevin O'Leary. I used to admire him a lot, but then you start watching them make mistakes and bad calls, and you start
Yeah.
realizing they're like everyone else, man. But
Kevin
let's check out.
O'Leary's awesome. Yeah. I don't know. Yeah, there was some pretty interesting, pretty scathing comments. So one of the comments was that the world is going to hell. That got my attention, and it was a very impassioned interview. I was moved by it. Unfortunately, I just disagreed with a lot that was said, and again, somebody in that position that is asked to come on and talk about their pulse of the stock market. There really is a line there that you can cross, especially now, because this is the first interview I've seen from Bill Ackman for a long time, and I found it very, very timely by CNBC. So good job on that. And I do like Wapner. Wapner's really good. He's a good interviewer. He might have brought out some of that, but they gave him like 20 minutes to sit there and it was crazy. It was like a doomsday scenario, man. It was really wild. And I guess from my perspective, I'm kind of looking at it in a couple different ways. I guess if we were the first country to have dealt with this, it would have been a little more interesting. But we do have a couple countries with some precedents, of battling through this thing, and there is data, that of which we're trying to get a hold of. It's given us a little bit of time, to get the vaccines. I guess the scuttlebutt, I guess, in the biopharma industry is that there's some pretty promising stuff. I just saw something come across my phone this evening, and we'll figure it out. I would love to see it sooner than later. Absolutely. And
did you
suffer?
Yeah. Did you happen to catch, do you watch Valuetainment at all? He did an incredible job at breaking down like the compound effect of how this virus could expand. And he did it as though it was compounding every 6 days, I think every 8 days or 12 days or something like that. It was pretty brilliant. And then I was listening to a few of the, I think he did an interview with a couple of the scientists or the virus experts. And they were just saying that right now, the only thing we can really do, because even if they come up with something that might help fight it, it's going to be so long down the road, but by then it'd be too late. So more or less now it's just taking control of it and kind of protecting the healthcare system. In Canada here, they're enacting laws and things they haven't done ever. Like you can't even get married right now. They closed the marriage license office. They're thinking about using GM plants to start producing, I guess, just, medical supplies. I mean, we're talking about, it's crazy how fast this stuff just comes on and how important it is to actually listen to people like yourself. Because I remember like a couple months ago when my buddies were buying stocks and I said, man, like I don't want to recommend anything, just be easy, because even at these levels, like it's too extreme to rush in. And then all of a sudden you're like, damn, now you want to be buying. Like if you were taking it easy before, now I'd be loading the truck. But you just got to prepare for the volatility, because everyone that I'm getting investing now, it's just kind of convincing them to look like, I don't know how far this could go from here, but you have to understand, like you're getting 50% discounts off some pretty major companies at these levels. So if they drop more, like just be really happy with what you got, because I haven't seen these levels in over a decade, right? But we got to keep the idea of those top tier companies in mind and try and stay away from those high leverage, because there's a lot of people getting hammered right now that are still holding on to some of those highly leveraged companies. I don't want to throw too many out there because I know some people that are, and I don't want to, upset too many people because they're still, they think it's going to turn around. But when you're looking at companies that are holding, billions of dollars worth of debt and they're kind of relying on that next check, like they're looking for bailouts right now. And then it's fun playing the chess game with the airlines. I'm kind of on the edge with airlines, but I like holding my long-term recession-proof kind of on the balance sheet stocks. But those airlines, if they when they turn around, that could be some extreme. Well, you were just saying you're picking up Boeing, right? But there's so many of them out there with like large cash flows and stuff still, or cash on the books.
I already did. So this week, my trading action in Boeing, I took a swing trade quickly, made a quick $1,800. So just a buffer. Yeah, it was that morning that it dipped below 100. And I picked it up there and it swung all the way up to $124 that same day. So I was like, okay, that's my buffer. I'm good. I know it's going back down. It was just instinct. I could have been wrong, right? So put that buffer away, then entered back into the position at 99.30. That's my entry. And you can't really figure what a good entry is at this point. You really can't. So I'm welcome. I'm welcome at this point to use that buffer basically to the downside and further. I really have a feeling that Boeing is going to be fine. That's just my staunch call. It's a bold call, and I do have my existing smaller position in the IRA right now, which will continue to work and do whatever it is it's going to do. That's fine. This is a position outside the Roth that's a little bit bigger. So, and then with the other positions as well, I wanted to go ahead. That's where I saw the most value, to be honest with you. And it's typically reasons like this that I don't invest in airlines specifically or cruise. Yeah. Okay. But Carnival's trading at 2 times forward. Carnival's not my favorite. It is the largest. They've got about 50% of the market cap, part of the industry, just a little less. Norwegian Cruise Lines is my personal favorite. And then Royal Caribbean is actually what I feel like is the best of breed. That's my personal opinion based on people that I've talked to, tutorials, the quality of ships, the quality of experience, etc. So it was worth taking a multi-year stab at it here at these levels. Relative positions, 50 share positions, I believe, in the bigger ones. And then with 50 share positions on the bigger ones, Delta, United in the airlines, and American Air, a little bit larger 100 share position there. So relatively small, but worth the shot. And nice, it said, I'll wait it out and make them good positions. So.
Yeah, I'm kind of at the point now where, like I said, I'm just kind of sitting on the sidelines. I've set all my stock portfolio up on just share repurchase, and in the meantime, I'm just trying to keep my cash flow sustained. I'm glad I keep a bit of capital sitting on the sidelines because I don't want to stress myself out here. Because a lot of people aren't. I think they're going to be taking advantage in the wrong way of the benefits the government is releasing. Considering a lot of people are like, oh, I don't have to pay my taxes now. Oh, I don't have to pay my student loans now. But now is like the prime time, now that you don't have interest on those things, like get them out of the way. If you can, start paying your student loan off and you're lucky enough to have a sustained income still, like don't look at this as a break. Look at it as like the best opportunity you're going to have to fast track it, right? But even outside of the stock market, like we're trying to find little ways to take advantage of all like the price options, even with fuel. Like we've got 3 jerry cans outside. I plan on going to the gas station tomorrow and just pre-filling fuel, leave it in the shed, and then I'll just fill up my tank when I need it. And as soon as gas goes up, I'm going to be saving like, $100 on my next few fill ups. Yeah. Like just little things like that, right? People are just overlooking completely.
Fuel is free right now, man. Fuel is free right now.
Yeah, I know. I remember Matt. We should get Matt on here because Matt was saying that oil's cheaper than bottled water is right now, by the same amount, right?
Well, Matt knows what everybody else. If Matt knows what everybody else knows about the consumption rates incrementally increasing into 2021, all he's got to do is hold true because he stands to make a fortune. And I would wish nothing more than that on my good friend, because I know he's heavily levered a little bit more than suits my taste. But I really do think it's really being underappreciated. We're just involved in a trifecta right now with Saudi Arabia and Russia. That's what's going on. Let's be real. And they're playing their ace, and good on them for doing it. It's a geopolitical move, and it's a good one. They played their part at the right time.
Well, I don't know. Well, it depends on how you want to say good time, because they still want to be profitable somewhere down the road, I'm sure, as well. But I don't know anything about oil. I shouldn't even talk on it. It's not my strong point. But I got to ask you a quick question as well. How are you managing with your job and your family through all of this? I'm not sure if I caught you mentioning it on the last stream or not, but I'd love to hear about it.
Yeah. So, I mean, I'm home, actually. I'm teleworking. So I've got some pretty good opportunity with remote capability. I think there's some improvements that can be made, obviously. Speak on that. Some of the companies that are out now, actually, man, work with Slack and Zoom. I like those companies. I think that's going to really drive the interest in those companies to be able, because I can do my job from my home. It's easier from the office, but I can actually do it from a skeleton perspective from my home. It just makes it a little bit more challenging with the lapse in technology that I have to go through, because when we do go remote, everybody's trying to get on the same remote servers. So we've got to be a little bit respectable about that. But I'm sheltering. When I go outside for my 1 per day, I ran again today. It was freaking 90 degrees here in Virginia, man. It was 90. How cold was it there, man? 20?
Our weather's been
12?
up and down. We hit a high, I think, of 5 or 6 today, and now we're back into the negatives.
Oh,
we
man.
we had a crazy humid storm. I wanted to go out for a walk. I've been really hunkering since winter, and I'm starting to get annoyed by it because even my girlfriend lives in the city, and she kind of just put herself on quarantine, and like I haven't seen her in a couple weeks now. And it's just the fact of it is what it is, but I'm so thankful. Like the smartest thing I did, man, though, was starting this YouTube channel a year ago, starting these websites, because like, oh man, I'm just fighting for income right now. But again, I don't want to complain because I'm by no means in like a terrible situation, but like to watch I lost somewhere between $3,000 and $4,000 in contracts till May. I mean, it's not a small chunk of change, but it's really nice seeing these YouTube checks still come in. And I mean, it's helping huge, because I couldn't have foreseen this, man. Like I've been doing this for a decade, and I've never, ever been in a situation where it was like one call after another, resorts, libraries, just bye, see ya, we can't do this, no payment, because, you know, entertainment industry is contracted. So I just watched Cirque du Soleil. They had a real awkward video that came out where they laid off all of their entertainers. So, I mean, if there's anything people can do right now is start some side hustles and kind of take advantage of it if they don't have a job. Because a lot of people are fortunate, like yourself, if you can work from home. I know Matt's working from home. My girlfriend's super fortunate to be working from home. But if you can start side hustles now, might be the best opportunity, right?
Super important. I think I tip my hat to you first. It's cutting a little deep when it starts to impact like the work schedule and things like that. Cuts a little deep. You know what I'm saying? So my hat goes off to you. Just, you know, stay tough. I think we're going to make it through just fine.
I'm not worried.
We'll have a better idea as this thing unfolds about, you know, when things start to level off. We're just not there yet. That's the crazy part about it, is we're just not in a situation where we can say, hey, in X number of weeks, we're going to have this thing, because it's either X number of weeks or, might I say, X number of months. And I can't really differentiate between the two at this point. I'm an optimist, right? So you know what my personal opinion is going to be, right? However, you know, the stimulus package that got pressed through is for a 4-month bridge. And I just can't foresee it going that long. But, you know, there are others on the other side of the table that are like, yeah, we're going to need it all and then some. So, you know, where it's 1 trillion, you know, if there had been 3 or 4 trillion proposed, it would have not been good enough. We want 8 to 10 trillion. Well, hell, why not just make it 20 trillion? I don't know, you know, but, you know, we'll see. But yeah, I'm fortunate. And the side hustle thing, you're right. I think it's good at any time. It definitely proves its worth, because, you know, this thing for me, I save all the money. I don't spend it. I don't use it for a living. It goes into an account, an investment account, and I invest all my YouTube earnings and probably give it to my kids someday, because I don't really care. You know, what little expenditures I make on the channel are things like equipment, lighting, you know, microphone things. So try to keep that, you got to wash. If you're going to run a business, you got to have a wash to deduct some stuff. And, you know, you've got to make sure that you're improving your side hustle a little bit. That I do like.
Yeah, it's pretty nice that in that aspect. I mean, we're not talking about huge income here, but honestly, between the reliance of my stock portfolio, my YouTube income, the websites, and any other little thing that I'm doing, I mean, it really does start to add up, which is nice. But I think people underestimate the value of their portfolios. I mean, I built my portfolio for a situation just like this. I mean, I was prepared for haircuts like this, but it's just the fact that I had a lot of arguments with people on my YouTube. They're saying, oh, they're going to cut dividends. Like, what are you going to do now? And all this stuff. And it's like, I'm diversified in a way where there's no way I'm going to be losing, you know, even half of my dividend income. And the fact is a lot of companies even just increased their dividends. I mean, Canadian Imperial Bank went into this on a dividend increase. You have Microsoft that just declared a dividend increase. And I highly doubt, with the billions of dollars they have in the bank, right? And we're talking about companies, again, these banks never missed payments through the dot-com bubble, 08 bubble. I mean, the RioCans never missed a payment through the 08 crisis, which should have been major on that balance sheet. But I mean, people seriously underestimate the value of having that cash flow in moments like this, because it's giving me the opportunity to still invest $500 a month, or heaven forbid things get real bad. Well, then I can tap into a $500 a month income, which again might experience a haircut here or there. But to be honest, with the companies I'm holding, most of them I bought for exact reasons like this, right? Like my prison stock, prisoners aren't going to just be gone. Tobacco is probably just as popular as toilet paper is right now. I mean, like, people, we just got to get to these first quarter earnings. I think as soon as we can see how bad companies are hit, everyone will be like, okay, we got a baseline now, and then hopefully things will stabilize. But I'm not going to comment too much on it, but I'm just, advocate buyer either way. So.
Well, if you could buy anything right now, Kyle, and you had a good chunk of surplus cash, what looks really interesting to you, if you don't mind me asking, put you on the spot a little bit.
Like I said, man, I've been buying pretty much everything up to this point, especially the banks. Banks haven't been paying out yields like this historically ever. I wasn't looking at REITs as heavily. I ended up buying RioCan on the big drop at 19, and now it's sitting at something like 15. But if I was buying stocks today, like individual stocks specifically, my focus going into this year was going to be REITs, and now it's 100% REITs. Because if you want monthly cash flow and that's what you're after, some of them might end up taking a ding in the short term. But if you can buy into a multi-billion-dollar real estate, empire where you're getting global exposure, or even in Canada, RioCan, everywhere, top premium real estate, and the people they're renting to are most of these food stores, like Loblaws here, Sobeys, Shoppers Drug Mart. I mean, if you can just go through and look at their balance sheets, I think you'll be more impressed by the discount that you're getting in that aspect of things. Because like I said, RioCan is trading at like half under its asset value. Like you're getting a 50% discount. It's like if you could walk out and buy a house and someone's like, oh, I'll give you 50% off a week later. Like it's a screaming buy, right? I mean, but it depends on your comfort zone. I mean, if you're out there, you're new to investing and you got some capital on the side and you're young, take the risk, man. I'm not a fan of those airlines and the cruise stocks, but if you can do what you're doing, throw just little bits here and there at it, start buying those real core fundamental stocks. Do keep in mind, you definitely want to pick up some core fundamentals that might not be high yielding, but you're getting yields they've never paid in a long time. So, I mean, my doors are open, but I think I'll leave it at that point. I want to hear, hopefully you get somebody else to pop on. I mean, this is prime time to get some other, perspectives here, but I appreciate you bringing me on. You've been terribly awesome through this, and I can't say thanks enough, man. You're incredible.
No worries. You got it, brother. You got it.
I'll catch you on the
man.
offline.
All right, brother.
Peace,
sounds good. Take it easy, Kyle. I don't know. There's something about bringing Kyle on that re-energizes me. I don't know. It's really cool. I think there's a lot of takeaways. I've got to know Kyle over the last couple months, and I think something of what I was able to glean from that conversation is he seems like he's staying very, very positive on this deal. Like I said, when it starts to affect the job, like I said at the top of the live stream, when it starts to affect the security and the safety and our general way of life. And for a lot of people, I think hope is a little bit more fragile than for others. But really awesome. I really appreciate Kyle coming on and sharing the perspective. It's a unique perspective. He's running down some of the list of some of those businesses up there in Canada. And I've been so lucky as to drive the roads a couple times when I was up there just for a brief amount of time, I might add. But it's fun to hear, kind of my brother from another mother from the north actually lend some perspective on what he feels like is looking attractive right here. I think the reason why I hit on that question speaks to a grander picture of, what would you buy if you could buy anything right here? And then the follow-on question is, do you have the ability to buy it? Okay. And it does speak to a little more of a fundamental premise that I insist upon. And that is having a cash buffer. And I don't prescribe to the methodology that somehow by having cash on the side somehow prohibits your ability to make money in the market. Okay. Now, the two schools of thought on this are very simple. Okay. The negatives first. I'm losing out to the impact of inflation. As money gets older, it gets less valuable. Okay. That's a fact. I get that. I don't typically use that as a justification. If you do want to use that as a justification for yourself, certainly there are products out there that can help buffer the effects of inflation. A high yielding savings account is a good example. But even over the last couple of weeks, the bond market has proven to go bananas, to be honest with you, I've really never seen this level of action. And I don't know if the landscape is changing to where more traditional means of investing, for example, a 60-40 portfolio with equities versus fixed income, which is a very prudent way of investing, and looking at the bonds market kind of being that hedge or that buffer in the portfolio. They're just not performing that well right now. All asset classes. I think we had one day this week that was extremely alarming. I think it was on Wednesday, I believe, where we had gold down, we had oil down, we had fixed income down, and we had equities down. You guessed it. And that very, very rarely happens. It typically, there's an inverse relationship between the equities market and, let's say, what's perceived to be a safe play in either fixed income or gold, precious metals, etc. But it's really just been drawn down so quickly over the last couple weeks that I don't think there's really anything that can be deemed safe at this point. But really appreciate Kyle popping on. Certainly, I will extend the olive branch. I will drop another invite into the thread here, and I'm going to go out and start working. I know we're within the first hour of the stream, but I am going to work on getting some shout outs to some of the folks who have made their way in here. A lot of good friends in the community here. But I absolutely. So there is your invite as well. I will keep my eye on the studio here. So if you want to pop on here, I know I had one of my subscribers on before the live stream, and we had a good talk. He was in the garage away from the wife. He said he was in a safe zone. He could come and talk to me. But he's willing to pop on here. I'd be willing to have him on. That'd be great to have a perspective from the subscriber base. But I do want to get to some of these questions. Wait, Boeing is a small company. No, I was being facetious on that one. This is the first comment that didn't cut off in the live stream, but it is an opportunistic opportunity, and I could certainly be punished for my my entry, and that's totally fine. I'm willing to take my chances with Boeing and make it a positive trade over the long term. The question is how long it will take. And I just, it's very, very hard to pass up on an opportunity like this. And we took a stab at it, and we could be wrong. We could be right. So I'm going to get to some of these community members here and just kind of peruse. But I'm going to bring another guest on. Mr. Joe is in the group here and has been kind enough to sneak out to a safe zone, and love to hear his perspectives as well. So I will throw on the ears here and let Joe address the group. I may let him just run the live stream, actually, and that way I can focus on some of these comments. But to get a multitude of opinions, I know there's a ton of comments here in the group, so I absolutely have my work cut out for me tonight to try to give some equal opportunity to everybody. So I'm going to bring Joe in right now, and we can share in the perspective of what's been going on over the last couple weeks. All right.
Hey, what's going on, guys?
Okay, what's going on, Joe? Very cool. I really appreciate this, man. So real quick, if you could just let me know how long you've been following the channel and how long you've been investing, and give us your real talk. I don't like to sugarcoat anything. I don't like to beat around the bush. If you don't like what's going on in the stock market, man, I want to hear it. I really do, because part of me doesn't either. And I think we need to kind of throw out there what our real opinions are about what's going on, and more importantly, what the heck we do about it.
Yeah. So, can you hear me all right?
I can hear you fine, Joe. Great. Thank you.
Yeah. I've been investing for a while, probably a few years, but not actively. I would say I've been following your channel probably since the beginning of the year, so about January. I found you. I just stumbled across it, and I've been following ever since. Love all your videos. Go through them all. And ever since I started watching your videos, I've been cutting a little more into it, trying to get a little more involved and be a little more proactive in what I am investing in. And I started with just redoing my 401k and looking at that stuff, the stuff I already had, cleaning that up, and then getting a little more involved.
Are you getting a match with that, Joe?
Yeah. Yeah. Yeah.
You contributing what you can for a maximum match there?
Yep. Yep.
That's a big takeaway, man, for a lot of people. I haven't even looked at mine throughout this whole thing, and I don't know if you're in a habit of just checking in on your 401k every day. I think that would make me mad.
Not
do
every
spend
day.
a lot of time, right, but you are checking. I have not checked it for a long time. That's really my sleepy account. It really is. If I wanted to press the accelerator, I could probably do a little bit more than what I'm doing now, but I'm happy with 10% of my income. That goes in there. I don't miss it.
Yep.
I've always lived on a reduced budget. I'm happy to do so. That money will be fine in the long term. And it is a truly passive account. It doesn't give me the opportunity to, finagle.
Yeah.
Which
No,
I've
definitely.
been guilty of.
It was one I already had that I want to play with starting point. So.
Nice. Now, do you have any other accounts, or is it just the 401k that you're doing?
No, so I have a TD Ameritrade account that I do all my single stocks through, and then I have a Vanguard account that I have. I opened up a few mutual. I bought a few mutual accounts with it.
I see. What style of mutual funds did you go with?
I did the VFIAX, VYM,
yep.
And VPU
ETF.
Yep.
Oh, rock on, man. Good.
Yep.
Yeah, I think you'll be good with those. Honestly, it's tough to have entered into stuff like that. I don't know. We talked a little bit before the stream, and I don't think you had enormous positions in those, right? You just kind of feeling it out and getting yourself kind of scaled into it. How on that?
On my single stocks, yeah, I have very small positions, but I'm trying to diversify it on a small level, and then I'll slowly trickle into it. In the Vanguard account, I have a substantial amount of money in there.
And that's the 401k with Vanguard?
No, my 401k through work is through another
some other company.
Yeah, some other company.
Gotcha.
Yeah.
How do you like Vanguard?
I love it. I like it a lot.
Yeah,
a friend of mine turned me on to it, and it's a good platform.
Awesome. That's great to hear, man. I like to solicit those inputs through the channel. You know how I roll, right? I just think as a community, yeah. Well, I like the products. I don't use the account itself. But do you buy the ETFs within your TD?
No.
So you actually have an account with Vanguard?
I have an actual account with Vanguard, so I buy the ETFs with Vanguard. I use my TD account just to play around with the single stocks, to learn more and to see how they're doing. Keep it separated a little bit. It helps me out.
What a rude awakening to the stock market, if you don't mind me saying. Holy moly, you would agree with me. It's been wild, I've seen some tough
I just started getting into it and following it, and while it was going up, and I was like, oh wow, this is great. And I caught a little bit of the upturn, and then it started going down, and I was like, oh, what did I do? And then I found your channel, and I was like, all right, well, I like what he's got. I like what he's saying, and if he's saying stick with it, then I'm going to stick through it. And the more I watch it, the more I believe in what you're saying.
Yeah, I'm not one of those guys that come onto YouTube and say, hey, the market's going to do this, but I will come onto YouTube and say, stay the course.
Yeah,
I'm right.
Yeah,
and I'm not the only one. Like, you don't need to hear it from me. If you want to hear it from a lot of these other really good channel creators, we are fairly like-minded on the ways to succeed in the stock market, which seemingly escapes a lot of people, in my opinion. People never, ever cease to amaze me at how they can revolve around, go under, jump over the truth in investing, but never really articulate the very simple truth that I'm as vocal as I can be, and I've heard others as well articulate it much better than me. I've got my favorites as well, and a lot of these channel creators I endorse specifically because of that manner, because they say what I say in another way. And if you can hear the message from me and it can motivate you to stay true, trust me, you'll get that validation. You don't have the level of experience in the stock market to even understand what that feels like, but I can tell you, man, it feels good. And I don't know, it may come in a lot of different forms going forward. We may get a little bit of relief rally and then draw all the way back to these levels. I don't know. And it's going to be kind of a whipsaw battle over the next couple months, I think. I think especially over the next couple weeks. I've got a very tight time frame over the next couple weeks to really allow what is going to happen to happen. I'm going to deploy one of my techniques that usually is things are not very good, and that's I'm done. I'm done investing. My book of business can be shut for a while. I'm good. I'm good with my cash exposure. I'm good with my Roth IRA. I'm good with my contribution limits. I doubled up on my SPDR portfolio for the group just for awareness. I had the $2,500 of SPDR ETFs in there. I threw 2,500 in there and went ahead and doubled up on that. So I'll let that work. It's fine. But my book of work is done. I don't need to sit there and stare at it anymore. And it's actually a strategy that I deploy to be like, you know what? Think of something else to do with your time, maybe. Monitor it, yeah. But don't sit there and fret about it. Don't sit there and stare at it. No amount of staring at it. I've got stuff to do, Joe. You know, I'm sure you do as well.
Yeah.
You know?
I got a day job.
I know, right? That of which I'm pretty thankful for. Did you catch Kyle's last interview when he popped on here? You know, that's some real talk right there.
Yeah.
Yeah. And I think if you can take some comfort in the security of your employment, and I think we should do that more often. I really think we should kind of be thankful for what we have. And investing, I've said many times, is a luxury. It is a luxury. And people are like, yeah, right, Ryan, what are you talking about? It is. There's people around this world. You know, my wife she's from Czech Republic. She's European, right? So she said just today, she's like, you know what? People in my country don't get a payout. They don't get a check in the mail. Mm-hmm. Like, what are you talking about? Stuff that Americans are sitting there with their hand out being like, okay, let's get as much as we possibly can for this deal. And in many cases, they do need assistance. But I actually think businesses are going to do the right thing, man. Even though they had to close the doors for the safety and health and well-being of people, I actually think they're going to do the right thing, you know, and bridge those payments. I do. Now, part of the stimulus does add for some of that in a big way for small businesses. But I don't know. There's been a lot of interviews of people who are like, you know what? I'm not taking compensation. I'm going to give a bonus. And here's the thing. Whenever I see that happen in the history of me following things like that, people typically don't know how to cut back to the bare basics. They want to just continue to run the same style of lifestyle that they've run before the crisis. And that type of activity, what's that?
It's the American dream.
Yeah, you know, it's so cliche, but it's so irritating. You know, like get over yourself. It's a sense of entitlement, and it bothers me. And, you know, when I do travel abroad, I do feel like, wow, you know, we do have it good. But man, when we're going through crisis, you don't need to be, you know, all the spring break partying right now. I saw a Facebook post that showed that 8 of those people were positive. You know, how would you feel if you were down there rubbing cheeks with everybody on the beach on South Beach because you just wanted to throw caution to the wind, and boom, there you go. One of the most, you know, contagious things that we've ever dealt with, and you were there. How would you feel? You know, I just think you have an obligation to the older community, man, to do the responsible thing. And I think a lot of people are doing it. And that's actually kind of the glass half full type of perspective. Is I'm actually seeing some amazing stuff right now, especially on the front lines with our healthcare workers. I think it's magical. We're going to see some people come together and do some impossible stuff. It's going to be awesome.
That's good.
It's what happens. You know? So what do you think, Joe? Are you adding to this at all? Or, I mean, is your wife on board with your investing posture? You got to get that right.
She's on board. Yeah. But she supports it. But I haven't set her up with anything yet. I will. Okay. I will, you know, like the kind of like the same way you set your wife up with one too. I'm getting mine solid, and then I'll do the same thing for her.
Awesome. How old are you guys?
I'm 32.
32.
Yeah.
Jeez, man, I'd kill to be 32 again. I just think so. I know, right? I kind of look at this with a different lens too. I know it's probably a jarring thing for you guys to be going through. I don't want to tell you what I'm off in my portfolio. It'd probably scare you a little bit off, but it's fine for me. I don't really look at things like that anymore. You get to a point like a lot of these investors, and that's not why you invest. You don't invest for that time in the market like now to look at your negative amount in the account and say, see, I told you so, self. I told you not to do this. You know, it's kind of an inhuman thing to put your money to risk. It's kind of an inhuman thing. It is the responsible thing to build up your assets bucket in a responsible manner, because what doesn't jump off the page for you is that assets bucket will work for you from the second you start it until the second you look at it and say, wow, that was the best decision that I ever made, you know? And it's not these little times now that you're going to look at it and say, wow, investing's the greatest thing since sliced bread. Be honest. You know, I'd go out on a limb and say it freaking sucks right now.
Yeah.
Okay.
It does suck.
What do you...
I'm still buying a little bit here and there. You know, I was, like I told you before we got on, I started buying as it was going down, as everyone else was. And then I stopped because I was like, I don't know where the end is. No one knows where the bottom is.
Crazy.
And
for sure.
You know, I don't want to put myself in a position where I'm going to regret it. So I stopped, and I decided I'm going to build up my cash. And when I think it's at the bottom, I'll put a little more in. That's kind of what I've been doing. So
see this comment. So Odell's my good friend, man.
Yeah.
He runs my Facebook group. He's one of the administrators in there. Super, super cool guy, man. It's one of these folks that you meet through social media, and you're like, man, I'd really like to meet that guy someday. Just a solid dude for sure. You won't hear a comment like that from me. Saying that the market's going to bottom in June. Hell, I don't know. I mean, the market's been so volatile. We could see positive news next week. It's that up in the air. You know, we could continue on a downturn next week. We could see a radical change in direction, because there's a lot of moving parts right now that are coming through the pipeline. Medications, test availability of a perspective that's worth talking about on what a test actually delivers to somebody. You know, 11% of people who are being tested are showing up positive. 11%, guys. You know, if you have symptoms, stay the hell home, right? If you don't think you need a test, stay home. Do what you're supposed to do. Self-quarantine, do your thing, right? But if you are in need of such a thing, why do we have only 1 out of every 10 tests that are administered coming back positive? You know, is there that many people? I ran by a Centera, which is like an urgent care clinic right next to my home here. And they have the tents set up where they're administering the test. And people were driving through there the first day that they had set it up. There was a line. There was a helicopter in the air filming this. For the last 3 days, there hasn't been anybody there.
Yeah. Same here. It was they set up a big testing center in a huge parking lot down by the beach, and people going in all day getting tested. Yeah. And
now, I had a few friends go to the beach today. It was 90 degrees, you know. Yeah. But I don't know. I just think some of the most populous areas, I think, in the U.S. right now are really being strung thin. I really do. New York and California, populous areas like the Northwest, Seattle is in rough shape, you know, because they're just so populous and they just don't have enough. And we'll learn from this. I really do. I always look at it like, hey, it's hitting the fan right now. There's not a whole lot you can do. You can start blaming everybody under the sun and this and that. And I typically don't engage in that dialogue either. I really don't. It's you know, we'll have some all-stars step forward, man, and we'll solve this problem just like normal. Me, typically, I'm used to stepping into situations where I'm like, dang, man, I don't know if I can solve this problem with my job specifically, but with the group that I work with, whether it be my closest team or a team that I get deployed to, and we get together and we work it as a team. It's amazing how big a results we can come up with. And I don't think this is going to be any different, man. I really don't. We've been tried, true, proven, tested, and come through the other side. And I don't think this is going to be any different. That's my God's honest, heartfelt opinion about what's going on right now. It's just really difficult because I think everybody's trying to embrace some good news, and it's hard to find because it's not freaking not there.
Yeah, and like I told you before, like I'm in New York, and they just shut down everything today, except for infrastructure critical jobs. And unfortunately, I fall into that category. So fortunately, I still have a job, but at the same time, I got to go out there and still interface with people, and be at my own risk.
Yeah, is it like a small business or something? I mean, do you feel like is it kind of ops normal? Or are you guys taking like any additional precaution? Because I mean, he tried to shake my hand. That's a big thing. I'm a business guy, right? And now, hell, I'm against it now. I'm like, I don't think I'll ever do that again. I like how the Chinese just bow. there's no human contact. I like hugging too, man. I'm an emotional guy, but somebody tried to shake my hand the other day, and I gave him the elbow, and he looked at me like, "What's wrong, Ryan?" And I'm like, "Yeah, man,
we've been given a lot of elbows."
Yeah, man, for sure. Kick a toe or something. I don't know. It just makes us think about those little nuances. How we can clean. I think human beings are dirty as we are. We're just dirty people. We personally, I feel like we're pretty dang clean. We clean. I live in an apartment, but we're clean people. But man, people are dirty. Like clean it up a little bit. Okay. Didn't you ever learn that when you were like 5 years old? Clean your room, wash your hands after you do your stuff. Do we really need to be told that stuff? I don't know.
We do.
It could probably probably go a long way. I'm just saying,
I think it's going to have a big impact on people, going forward, especially with all the new basic hygiene that everyone has to relearn.
Yeah, I think you're right, and especially New York, man. I lived up there, and my God, man, you go down and try to hang around Times Square in the middle of the summer. See, I made all those mistakes. Trying to bring the kids onto the subway, and it's like, dude, everything is like, you can feel how dirty it is.
Yeah.
You can just like, it's sick. There's too many people for too little area, and I've got a special place in my heart for New York. You know what I'm saying? I typically like it more a little bit in Long Island. I had some good times down there, man, on the beach. I remember some pretty good times down there at Fire Island for sure. But,
I actually am working on Fire Island right now.
Are you now? Nice, man. It's very cool. Yeah, we went to the air show down there, and I just thought it was cool. We went on one crazy. It wasn't very crowded, and it was amazing being just in New York, and the water was such nice color, and it was just serene because it was like, man, we're pretty far north right now. We vacation to the Caribbean and that, and I like blue water, and it was really nice. It was really pretty, man. It was good. It's good times.
You found blue water in New York?
It was pretty nice out there that day, man. Now, a couple times I went back, it wasn't so nice, and I was like, man, what happened? It churned up, but that day we went out there, it was super nice, man. It was really nice. But yeah, I don't know, man. Yeah, my heart goes out. Certainly, it's just there's a lot of people. It's very congested. People don't understand, man. New York's a trip, man. It's a trip. I mean, I'm from the country in Oregon, so. Being in New York, I remember the first time I took the Staten Island ferry over, and I'm looking up, and I'm just like, dang, this is where do I go? This is crazy.
Break your neck.
for real. It's just overwhelming, man. Yeah. It's like all the stuff you had seen for so many years on the movies, and my kids, of course, they're little, so they're taking it for granted. Me, I'm 40 years old, and I'm just like, this is the first time ever. But I think one thing I learned about New Yorkers, man, freaking resilient people, man. They're fighters. So New Yorkers don't take crap from nobody. So we'll see. Hopefully, I mean, you're going to have to you're just going to have to tough it out. That's just what it's going to take,
That's what we do.
That's for sure. That's what you do, man, for sure. And it's important. It's important that we demonstrate that. It's a lot of people look to New York, really, from around the world, honestly. And I couldn't have appreciated that until I lived there. You know what I mean? And
how long were you here for?
Just 2 years, and being in the military and doing my job right there right in the Bay, right in front of the Statue of Liberty. And I don't think I've ever been to a place where I was as beloved as a military member than New York City. That's the God's honest truth. If y'all want some real talk, try to go to the St. Patrick's Day parade. And, we had what was called it was Fleet Week. Have you ever heard of that?
Oh yeah.
Holy crap.
Oh yeah.
Dude. I mean, it was just so cool, man. Because you could be rubbing shoulders with. Adam Sandler had a bunch of people back after his show, lots of different post parties, and they just so cool, man. Yeah, I've never ever had that feeling in any city I've been to. I've been to Texas, I've been to Detroit, which I have a special place in my heart for, but New York was different, and I think it really came from I think what happened after 9/11 when people came together the way that they did. Honestly, I ran into Eric Trump in the bottom of the Trump Tower. He took the time to come over, talk to me. Hey man, this is great. You guys keep them honest. Took pictures with my family. Coolest guy ever. One of the waitresses there the waiters actually in the Trump Tower. He was actually in the building when it got hit.
Wow.
Actually helped like recover people and do that. Now he's a waiter there it's crazy, man. You just never know who you're going to run into, man. It's just some cool stuff, man. But man, I really appreciate you coming on. That's awesome, Joe.
I'm gonna jump off. Appreciate being on the channel.
I know you're on borrowed time. It looks like you're in the man cave there, man.
Yeah. I'm waiting to have my drink, but I don't want to drink it on the live stream.
Do your thing. Well deserved. I'm gonna have one when I get done here too, man.
Awesome.
Thank you, Joe. Appreciate
you, Ryan.
Be well, brother. Yep. So awesome. Rotating folks through. There's definitely a lot of folks here with some great comments. I got Matt, who I did throw this up here, and I didn't have any time to comment on it, but I don't know, maybe great minds think alike. I actually was a little light. It's nice to see that he got that low entry in the low 40s. That technical support in you got to go back before 2018. So that actually broke through that multi-year low, and it didn't stay there very long. So good on you, Matt, for making that purchase. I think mine was about a little closer to the higher price point. I don't think I was in it at 48.50. There was a little swoon in the stock today as well, especially at the end of the day. But nonetheless, we're in that one for the long term. That's awesome. I was glad to, in all the positions that I'm actually down, it's nice to get some of the recessed opportunity, and that's only by nature of having some cash on the side anyway. So I bought my 1-year-old daughter Disney, so Avi's been doing that for a while. It's awesome. Got Disney at 82 this week, and that's crazy. I didn't even pay. I knew it got into the 80s, but that's a very, very good entry on Disney. I like it. That's a multi-year position for certain, and just a blip on the radar in the short term. I know it looks a lot more deadly now in the short term, but I like that strategic buy in Disney for sure right here. I like it. I got Christian Gonzalez. I think I'm going to load the boat on banks, super secure and down because of Fed rates. Yeah, so the interest rate being low right here, I think the financial position of the financials here is quite good. I'm going to rattle off the sectors that I think are probably the most attractive. I know the energy is going to surprise you guys, but that is number one on the list. I know there's a lot going on right now as far as volatility, but with risk comes reward. And the consumption rates that's not made up. Okay. Oil is one of those commodities that we do need and we always will need. It's that simple. There's geopolitical infighting going on right now, and it's really unfortunate to see the industry driven down like that. But we're going to put a lot of pressure on our larger players, ExxonMobil, Chevron, and British Petroleum being the top three as far as I'm concerned. I would throw Valero in the group as well as one of the biggest refiners. But those top four right there, they're gonna be able to shoulder this burden. Unfortunately, the smaller players in the industry, they're going to get consumed. It's the same discussion that we had last time oil went below 25. This time just feels different. It seemed like last time was even more controlled of a drop, and the stock market dropped every single day. It would go down $2 every day. The stock market would go down a few hundred points every single time. I just think now we're getting a double whammy. I don't think this energy price is helping the stock market in any capacity at all. However, if you were looking to add some energy exposure right here, I think energy number one ripe to the pick, and I can't ignore the valuations there in some of these fine companies. The next on the list, I would agree with you, is financials. I really do think. I've got a huge list. BlackRock has come off a bunch. Morgan Stanley, Bank of America, Berkshire Hathaway, JP Morgan, Citigroup, and Wells Fargo in the financials group. So those being kind of the picks right there that I really feel the most strongly about. Next in the top three, finally, is healthcare. I just think that J&J really hasn't come off. I think that's a good thing and a bad thing. If you don't own the stock, you're really not going to get a whole lot of entry in this, because J&J is watched very, very closely. And the difference between 15 forward and 16 forward may mean the difference between buying or not buying the stock for a lot of major money managers when they're looking at J&J, because it's quite frankly a buy at all times. But you're looking to get that little bit of a slight discount in entry in J&J. But Pfizer and J&J here in healthcare, I like the action in Medtronic as well. I think that space is really going to benefit either during or just after this whole thing has come and gone. AbbVie looks good with their proposed merger, as well as Merck as well, just to pick up some of the larger players here. If you were going to start to establish a portfolio in the portfolio building manner that I do insist on, you don't need to look a whole lot further. If you need to know where to look, there's a nice list of 30 companies that you could start with. Okay, 30 companies comprised in the Dow Jones Industrial Average. And if you don't like Boeing, which is a Dow component, perhaps maybe you can look at a UTX or a Caterpillar, which both are Dow components. A UTX right here at $88 is stupid. Okay, take a multi-year position and live to fight another day. 10 shares, 5 shares, 400 for a bigger, smaller portfolio, right? It's all relative. It doesn't matter. Joe came on, he talked to me about starting small in his portfolio. That's what he's doing right now. And he's going to figure out, as small as that portfolio is, he's going to weather this downturn just like a lot of you folks are. And you're going to be able to reflect back and say, wow, look at the price action in some of these. You don't get this level of insight when the stock market is reaching all-time highs every day. But you're being provided a ton of stock market knowledge. And I think Quest to Fire mentioned it and said it best. I think we'll all come out of this better investors, and I am not exempt or immune from that. I absolutely feel like there was a lot that I did absolutely right, but there's a lot that I'm going to evolve and grow on in my portfolio as well in future opportunities and application. But for this time around, I'm of the opinion what's done is done. Yet we may drift down another, few thousand points, I might say. I don't think that's going to happen. I don't. Could it happen? Yes. But again, I don't speak in definitive languages when it comes to the stock market. I look at putting a fence around the stock market, and the stock market is a wild stallion on the inside of it. I don't try to control it. I just know that it's there, and it's going to do what it is that it's going to do when it wants to do it. And there's not a whole lot you can do about it. But there are some strategic ways of seeking out your exposure to limit your downside risk, buffer your holdings, pick quality companies, use scale to control the level of exposure that you have to the market. So you can run my rule of thumb quite simply and run it through the exercise when we're at all-time highs. And even Joe, had mentioned to me that it's easy to be an investor when things are going up. And when he started in January, he's like, man, this is awesome. I'm catching this wave of momentum. This is awesome, awesome, awesome. And then all of a sudden it doesn't become awesome. And he said that without the support of the channel, he probably would have felt a little bit alone in his program, in that maybe it's very simple to second guess what you're doing. And at that point, it doesn't matter about the quality in your portfolio. It doesn't matter in the least bit. You can talk yourself out of anything when you're doing the unnatural thing, and that is losing money, right? And that's the way we kind of sell it to ourselves, and at that time become our worst enemy. But I like that. It's a little bit of opportunistic buying going on. 12 shares of Apple. I like it. But Disney at 82, that he's recognizing. Brent's in the group recognizing that's a good purchase right there. I really like it. He says Bill Ackman. I like it. Yep. The world's coming to hell and going to hell. I just thought, man alive. I wish I could lose $2.5 billion on Valiant Pharmaceuticals and be as respected as that guy is. It's really interesting. I don't know. I think there's a lot of good sound investors out there. I'm not really sure where we have to put certain ones on a pedestal, because I'm really interested in the real results that guy can produce. Certainly. I'm interested in, the fundamentals and the technicals of what actually goes into the deliberation of looking at what stock to buy in one sense or another. But I actually think there's a lot that is missed across, especially the hedge fund industry, in that they're always looking for that next best thing. And that's wonderful. I found it extremely difficult to do. And I don't invest that way specifically. And I'm sure that they found a way to make an incredible amount of profit doing just that, until the market does just what it's done over the last 3 weeks. And they get caught with their pants down. And the first thing they want to do is come on and complain about it, when that is the very environment that I'm trying to explain to you guys with regard to the humbling nature in the market. And I would rather be humbled holding a Johnson & Johnson as opposed to Herbalife. All right. No pun intended. Okay. Good stuff. Now Matt's talking 23 cents a month. Love it. Priced it. Oh, it's below 15. That's awesome. He's given some fundamentals there on what he's looking at. I like it. Might open a position in Ryocan. I like it. How about Ryan Can? I like it. It's really good. There's a lot of companies out that are going to be producing that next best thing. There's new ones every single morning on this deal. Just be kind of careful a little bit on trying to catch a wave on some of that stuff. I don't think there's a whole lot in the market that is immune to being sucked down with the rest of the market. Just be careful. I would be looking at quality right now. I'll continue on with my sectors that I'm kind of looking at. Technology, and I know Kyle had mentioned Microsoft, but the action in Microsoft has been extremely encouraging. I just can't believe how well this stock, as well as Apple Computers, has held up during this downturn. Very, very encouraging. If those two companies start to drop, I really think that's going to be problematic. But it looks like they found some relative strength today, even on a down 1,000 points day. Microsoft and Apple, if you had the two opportunities to buy two of the finest technology companies, and really in an industry that I feel is probably not going to, China's coming back online here, guys. So I do feel like, in up markets and down markets, I think those may be the companies that are a little less exposed, perhaps, going forward. And that's indicative by the price movements in each of those. Staples is definitely one of those unloved sectors right now. General Mills and Mondelez really looks good in Staples. There's a lot of other names in Staples that I would throw out there as well that look really good. Some of the interesting food companies, Hormel, Tyson looks really good right here. Just some fun investments right now that you can be kind of rest assured that you're getting some rock bottom valuations on at this point. In the telecom space, Verizon is probably the cream of the crop, and then behind that, a short second is AT&T. Here, just dropped below $30 a share at 28. It's just kind of hard to believe with such a good yield. Just think a better balance sheet, obviously, with Verizon, but both to benefit from the 5G rollout, as well as we start to tamper down on some of this panic selling that's going on, and really start to realize that these companies were the same companies that they were in January. There's going to be some heavy buying. And to see how quick the bond market does recover will be interesting to see how these telecom names do recover. REITs are next. We've had a lively discussion on REITs tonight. being the position I've recently taken. Simon Property Group, I know, is probably an outlier pick as well. That's a crowd favorite. It's one of my favorites as well. It's just unfortunate that it falls under that umbrella of brick and mortar, which may have some continued pressure from Amazon, which is just on fire right now. The action on Amazon is extremely encouraging and certainly looking really, really good. It'll probably march right back up above 2,000 here shortly. And then my favorite in the REITs is American Tower REIT at 200. That's a pickup right here for sure. I like the name. It's really quite good. And then utilities, which the unfortunate part, I would put them higher on the list right here. It's just that they came into this downturn with some pretty rich valuations, and they've been just recently drugged down. So as the market does come down, you're getting some opportunity in some of the big ones, Duke Energy, Southern Company, and Dominion Energy, just to name a few. There's a few others as well that I like in utilities. I don't invest in individual utilities. You guys know I just own the ETF, which is VPU. Okay, is the ticker symbol there. You guys can check that out on your own. It's comprised of 59 ETFs, and for the single stock owners, they're gonna contend that they would rather just have the one or two cream of the crop, and that's a fine argument as well. I like owning that industry all at the same time, and live to fight another day there. And then discretionary materials and industrials at the very bottom. You say, well, wait a minute, Ryan, it's kind of ironic that you've got industrials last, but you've got Boeing, and you've got some subsectors of industrial and travel and leisure in that group. That is true, but I am pretty heavy in 3M. I'm pretty heavy in Caterpillar. I'm pretty heavy in United Technologies to round out my core holdings within the Roth IRA. Thought it was worthwhile, as well as a position in Boeing within the Roth. I thought it was worth taking a stab out here anyway. Outside, again, I could be a dog. It's fine. You guys aren't going to dislike me because I lose money on a stock trade. I'm disciplined enough to where I understand the relative meaning of lose money. And I find it interesting how a lot of people misconstrue what losing money is. Okay. Has Gen X dividend investor lost a bunch of money in his portfolio? The answer is no, not in the least. He just owns a 35% discounted portfolio at this point, none of which have changed with regard to the share count. And if you think for a second, I don't want to speak for Gen X. I would say this: if he's not putting some new capital to work in this stock market, I would be extremely surprised. Perhaps maybe a prudent move is to demonstrate some discipline in this market, absolutely, and hold off and see how things go. I've been through this exercise many, many times, and sometimes I buy, sometimes I'm right, sometimes I'm wrong. Here's the point of that. You're not going to have all day to sit there and deliberate, because it'll probably be too late by the time you decide to pull the trigger. Okay. What I know tonight and can report to you is this: we are down 35% in the market. Okay. If you were just as inclined when everything was hunky dory in the stock market, why would you not be content with entering into some stocks right now that have been oversold? Disney at 82, it just seemed like a month ago. It seemed like a month ago that stock was trading at $156 a share. And it's interesting to me, the dynamic and how the mindset changes to where it's more rational to buy the stock at 156 as opposed to enter into and justify entering into the stock here at 82. Why? Because they've closed their theme parks for a few days in the interest of health and well-being for people. See, I look at that as a positive move. And, Disney is one of those flagship operators that It's the feeling you get actually when you go, and there's a reason why I have that unwritten rule as to why I think Disney is one of those top 5 companies you can just own forever. It's because nobody does it like Disney. Nobody. It's the experience you get. And to invest in a culture and a company that is as well run as that one is, you're not going to be provided these opportunities. And I'm not saying you have to rush out and buy Disney on Monday. If you think that's the message from this, you're missing the point. The point is you're not going to be provided these types of entry opportunities very often. And make no mistake about it, what I can report to you is that opportunity is screaming at you right now. I'm not going to scream at you. I'm going to calmly tell you that it's there. I already own Disney. I was just as happy to own it at 156 as I am here at 96, whatever the hell it is. I don't care. I'm an investor in the company. It's set up on the drip, and I'm satisfied with that asset. I'm proud to be an owner in the company, just like I'm proud to be a new owner in my new companies that I just bought today. I'm totally fine with that. It's one of those unwritten things. I look at it this way. Warren Buffett was able to buy Delta and United in the 40s and 60s, respectively. I'm sure that he got one of his sweetheart 10% dividend deals. But the shares that I own right now are the 2 same airlines that Warren Buffett owns right now, and I got them at a deep discount. Okay. What does that mean? I don't think the airlines are going away. I really don't. And it's a position that I'm willing to be wrong on going forward. In the long term, I will prove myself right, absolutely. But we'll just have to give it some time, because if you come on the channel next week and say, hi, I told you you're down 10% in this name or that doesn't really mean a whole lot to me in the long scheme of things. What I was telling Joe before the stream and before we came live tonight, if you are going to dabble in some stock right here, make for certain that you're okay with a 3 to 5 year time horizon on these. Don't buy them thinking that you're picking the bottom and then it continues lower on you. Don't get into that level of activity right now. Okay. Just set a nice floor for yourself. Make strong moves in the market and make these moves with the anticipation that I think, I'm just going out on a limb and saying that the Carnival Cruise Line is going to be around in 3 years. Where's the stock price going to be? Is it still going to be at $10 or is it going to be at $60? I don't know. All right. But I'm willing to take my shot. Okay. You guys know my position on this. It is certainly stretching a little bit with regard to how I typically would invest, buying into such weakness. I typically just like to buy quality, and that's good enough. But there's a ton of quality out there that I already own. So, taking this strategic shot in time absolutely made sense for me. And what makes sense for you guys may be a little different right now. But man, if you're a member of this community and you're not looking at some of this quality like McDonald's that's floating out there, UTX, I've named a few, JPM here at these levels, Citigroup, Bank of America, Wells, some of these companies are really looking appetizing. And, I'm not saying you need to put huge positions in them, but buy a couple shares of it. Start that account that we're talking about. Remember, the spectrum has changed. Right? I told you I would do this when the time was right. And make no mistake about it, we are approaching that time. Now, the 9 or the 10 right there, 10 being the optimal in the stock market, where you're going to want to take 100% of your money and put it to work in the stock market. I'm at an 8 right now. All right. I was at a 2 when the market was at an all-time high, because I was tired of people asking me, how much should I invest in the market? I have $1,000. What should I do with it, Ryan? And I was like, I don't know, take 20% and invest it. I don't trust this market. I thought it would be a technical breadth of the market, not necessarily what's going on right now. Nobody could have foresaw this, but make no mistake about it, this is happening. It's happening. And I think the idea is to work along a spectrum and take your foot off the accelerator when things are really, really good. Certainly keep up with your dollar cost average program. I did, right? But when things go down right now, like I've already disclosed to you guys, I took the double up in that account. Why did I have the opportunity to double up the Spider account? Is it because I took $25,000 and dumped it in the account and overexposed myself to what was somewhat of an experimental portfolio? No, I started with a starting amount of 2,500 and I had the ability to double up that account at an extremely, extremely recessed ETF price in each of the 11 sectors. That's what I did. Okay. Right, wrong, or indifferent. That's what we did. Try to provide that clarity to you guys. I think JMac Investing did an awesome live stream on Wednesday. It was pretty cool. And you guys feel free. You know, I know he puts the olive branch out there to come into the stream at the end there. I know he tries to keep it under an hour. There's no way in hell I could run this live stream with as many patrons in here and community members. Man, I feel somewhat of an obligation. And I know, you know, I suffer on YouTube. I do. I'm really compromising, you know, my watch time and minutes to stay in here with you guys, the loyal 200, because these are racking in about 2,000 views every week. But the real devoted subscriber base and the real devoted channel creator base, the folks that are in here now, still an hour and 30 minutes into the stream, those are typically who I'm aiming the message at anyway. Because quite frankly, I don't want people to come on and get a partial message and try to extract a few 3 or 4 stocks to buy and never hear the fundamental message, and then want to come back and blame me for turning them on to a couple stocks and not really hearing the intent of the message. All right. I got O, WPC, and Cold are my REITs that survived the apocalypse. Good stuff, man. I appreciate that, Jason. Nice to see you. I appreciate you coming into the group. That's awesome. Yeah. So this was back to my conversation. He wants to shut down the world in 30 days. That's an interesting thought, I guess, if you are in China. This is the United States of America. All right. We don't do stuff like that. We take prudent, smart steps, and we're doing that right now. We'll see. We'll see how this thing comes out. Okay. I'm looking at the numbers, and I made a very, very shrewd comment on Jason's live stream to talk about the natural attrition rate of people. You know, how many people do we lose every single day from just old age, you know, that type of thing. And one person dies every 12 seconds in this country. And I'd love for people to live forever. The fact of the matter is each and every one of us have one thing in common, and that's that we're not going to live forever. Okay. So to put it into some level of relative perspective, I know the flu was thrown out there. The difference between this particular event and that is that we are seemingly very comfortable with what we know about the flu and very uncomfortable with what we don't know about what's currently going on. So definitely adds some of the you know, some of the fear that's going on right now, and rightfully so. I would just ask everybody to keep a relative perspective on this deal. I am, and I know a lot of people would disagree and say, Ryan, that's a shrewd thing to say. You know, what the hell are you talking about? But the fact is 7,500 people die in this country every single day. You know, and it's not to make light of the situation. It's not. But do I agree that 1 million people are going to die in this country? No, I don't. I don't agree with that. And those were some of the many, many things that I picked up on this week. And it always seemed to come from the hedge fund community. I'm not really sure if they've just got a stick up their backside with regard to how they got caught with their pants down. I look, little value investors like me and everybody else in this group are just trying to get by. Okay. He said that he was really had a change of heart, and that he wasn't going to continue to carry only $200 in his wallet, but he went to the bank and he didn't disclose how much, but he was going to carry around a significant more than that. And I'm sitting on my couch and I'm like, I don't carry any money in my wallet, Bill. I don't. $200. I don't remember the last time I had $200 in my wallet. Why? It's worthless, and I don't think like that. I don't think paranoid. Okay. So just kind of put on your filter, guys, because it's being laid on pretty heavy. And I'm not saying to downplay it, but I'm also saying that don't try to upplay it either. We'll get through this just like everything else, and this too shall pass. I have no doubt in that. All right. This week I added Apple, Home Depot, Microsoft, Citigroup, Google, Facebook, BAH. You have to help me with that one. And CCEP. The last two, not too sure of, but KO for sure. BAH looks very familiar for sure, but I'm just not, it's not coming to my head. But the first ones I really, really like. I think you've done very, very well there. Very good entries. Apple, you got a fair entry on. Home Depot has come off really heavy. Microsoft has not come down enough. In my opinion, it's held up quite nicely. Citigroup has been obliterated. The entry on Citigroup is phenomenal. Balance sheet, phenomenal. Google, phenomenal. Didn't come back enough, really. You're not getting that attractive of an empty entry on Google. Facebook, you're getting a little bit more of a good entry on Facebook for sure. So good stuff. Jason, for sure. Awesome. All right, I'll work through these questions. I can't believe I only have a few minutes left on the live stream anyway. I don't think there's anybody who's going to want to pop on here that late with me, but I will throw one last invite in here. There's honestly too many comments for me to get to tonight. I do apologize for that. I do thank the guests who made their way on. There you go. The invite is there. If you just guys have a wild hair to come on and think that I've actually missed the message tonight, which I don't believe that I have. It's just another Friday. And like last Friday, you guys are the same investors this Friday than you were last Friday. I can venture to guess that you're the same people. You are 1 week older. That I can't get back for you. But as far as your investing knowledge, for sure, you're getting a ton spoon-fed to you very, very rapidly. And for that, I do apologize. But I do offer some of those nuggets on how you can keep your mind off of your portfolio. Your portfolio really shouldn't move that much. Okay. You shouldn't be that actively engaged with your investing that it's consuming you. Okay. I do pay very particular attention just because I'm a nerd and this is kind of my hobby. I don't really recommend that a lot of people take this up as a hobby. I do recommend that a lot of people do invest, and you can come onto the channel because I typically do pay a lot more attention to the market than the average bear. That's fine. You'll all benefit from that. But certainly making sure that we're remaining healthy. We're doing those things to keep us busy. I picked up on a Gen X video that he talked about being out with the kids or something. It was in a comment. I can't remember where I saw it, but he was out with the kids, and it was like, good on you, man. What a solid success story as well. To come on to YouTube and share something that he doesn't have to share at all. Doesn't have to, but does it. And seemingly is still just as positive as the day that I was introduced to the channel. There's definitely a page to be taken there. And certainly I'm an ambassador of that particular approach and perspective on the market as well. I'm not one of those rah guys that are going to get up here and blah, blah, blah. And I do know there's a lot of that activity going on YouTube. And certainly I hope that works out for people. I really do. I expect people to be a lot more critical of both myself and Gen X and every other channel creator in this group as well. To where if we start to get off track a little bit and stop with where the focus should be, and that is helping investors like Joe, who had the courage to come on after 3 months of investing. I mean, that's all this guy knows. He said he watched it go up for just a little bit, and boom, now he is in a recession. It's like, wow, that's a freaking rude awakening if I've ever seen one in the market. I come into this with years of experience. I don't bat an eye. I don't get it. It's okay. I was prepared mentally, and that's a lot of the game here is to be mentally prepared for these types of things when they do happen. All right. All right. I completely disagree. I'm a Pershing shareholder. I have no issue with his public statements. That's awesome. I appreciate that. Everybody's entitled to their opinion. You can disagree with me. You can completely agree with what he said. And we'll just leave it at that. Absolutely. I was actually taken back. I'm not a big fan of Bill Ackman anyway. And that those comments just were pretty much in line with what I would expect from somebody like him anyway. And I typically don't put people on a pedestal either. I don't really give a shit who you are. I don't care. I just don't. I really don't. I value people who really are unknowns in this world anyway. And I think we typically put a lot of people on pedestals, not just in that community, but in the Hollywood world as well. And it's interesting. This is my little niche, and this is my opportunity to come on and give my opinion, because those comments scare a lot of people, man. And you have a responsibility to not do that. Check yourself. You live a privileged life, man. So get over yourself a little bit. Seemed to me like he was paranoid. That's what I got. Good stuff. Honor Rake, appreciate seeing you in here. That's awesome. That was very cool. Wow, statements like that, fear mongering. I don't know. So, I mean, Andrew's continuing on. Bill was 100% correct. Yeah, that's why he called Blackstone after and apologized. So, I mean, you can look at the story however you want. To be honest with you, it moved the market 600 points. I hope the SEC takes a look at the comments, because honestly, I really didn't think Elon Musk's comments were quite as bad as going on there and dropping the ball on stocks that he's actually purchasing during the day. Let me tell you, man, that is just something that you just do not do. So it's great that you 100% agree. I 100% disagree. I think it's irresponsible. All right, cool. I'll skip right over that comment. It's awesome. It sells books. It very well does. That's absolutely correct. As long as these few people are benefiting from their initiatives, I guess it's okay. I guess that's the society we live in. Me, quite frankly, part of my underwritten motivation to do the Independent Investor channel, I was sick and tired of seeing people in glorified positions followed blindly for no reason. I actually think a lot of the heroes in this country are people you'll never even know and never even meet. First and foremost, the people that are actually on the front lines right there. So imagine those people that are actually dressed up in level 3 safety equipment, providing tests to people. Now that's real impact. And then you've got that maybe playing on a screen up there. What value does that provide to those people? Those people aren't shut down. What would you expect those people to do? Go home and stop providing those frontline services to those people? See, I think it's people speaking from a position of convenience. A lot of people, man, just like the guest I had tonight on my live stream, they can't shut down. They can't stop working. They can't do that. They can't take 30 days off of their life. Otherwise, they get shit canned, kicked out of their apartment onto the street, and they can't live anymore. That's reality. And I think the disconnect between people on their high horse and people who are living in the trenches every single day just to earn a living, I think need to be put a little bit more attention on. That's what I think. All right. And I don't think we need to be following people like that have an opinion about everything and putting so much stock into what they say because they make investments for people. And quite frankly, he loses a lot of money for a lot of people. All right. Perhaps maybe the truth hurts. I'm not really sure. All right. That's just my opinion on it. All right. All right. What's Jay got to say? China's cases have jumped back to triple digits today and 11 new deaths, even though their numbers are probably all skewed and wrong. Yeah, I don't trust a whole lot that's coming out of there anyway, but we'll see what happens for sure. It ought to be interesting. That's the tough part, is we don't have a whole lot to embrace here going forward. I only look at the World Health Organization reports as well. Other sources have much higher numbers. Interesting. Thank you, Jay. Very cool. Appreciate that. All right. Balancing all my dollars right now, figuring out what percent to deploy. That's what everybody's doing right now for sure. There is a time to hold, and sometimes the best thing to do on this thing is hold true. And live to fight another day. I'm taking it day by day. I don't perceive to know what needs to happen. I'm doing what I need to do. I mean, I'm following the Bill Ackman program right now. I'm shut down and I'm quarantined to my house. So thank you, Bill. God, I wouldn't have been able to come to that decision on my own if I didn't have you barking up my tree and telling me that the world was going to hell in a handbasket. So awesome. That I do appreciate. So maybe I do agree. All right. Good stuff. Some people might reach fire after the market recovers. We will see. We will see. All right. Anyway, wise thing to do. Very cool. There's one of our frontliners, one of the true heroes. You guys probably could just click over and free of charge, actually just subscribe to this channel. That would help you out a lot. The least I can do is make a call out for the hard work of the folks on the front lines that are really making a difference in actually combating this thing for real and not just talking about it. Right? Cool. Yeah, I like action. Don't really like words very much. I do like action. And I think there's a lot that's being done right now that either the media wants to subdue or not talk about. Certainly, this will be a case study for years to follow on what was done correctly and what wasn't done correctly. And, hopefully we're able to glean, because right now, I mean, whatever sells, I guess, to keep the money machine going, right? That's what's important here. Whatever we can jam down people's throats long enough to make money. And that's what it's all about, to keep the machine going for sure. And it makes it doubly difficult to actually take away from the truth here as well. So yeah, I wasn't sure about that, Jason. I was today. It was during the day, the Chinese numbers had not improved at all. But that may have changed this evening if you're checking them. All right. Here we go. See, I don't understand. What did Ryan do to get 1,800? Yeah, that was about maybe 2 hours, I guess, in Boeing. Picked it up at 105, sold it at 124, I believe, something like that. It was lucky. I was lucky, but took the swing in it. I had $100 base case, got long the position. It was a $10,000 block, man. It was a 100-share position. So I took it and I said, look, okay, I'm going to exit the position here, take the profit. And I used that profit as kind of a backstop a little bit to re-enter the position. I was given that opportunity to re-enter. But that basically is it. I mean, I could have filmed it and showed how awesome I am on YouTube. It was freaking luck. It had nothing to do with skill at all, other than just looking at some technical resistance here for a day or so, a couple days. It was on a free fall, guys. This was the worst month for Boeing since its history. This month, March. So Boeing's been around since 1918, I believe, is when they turned out the first airplane. It's headquartered in Chicago, Illinois. Their big factory is out in the Great Northwest in Tacoma. So, I could be wrong on this, but that's it, specific to your question, that chronicled that trade anyway. So, but I'm happy about my entry at 99.30. It's been kind of hovering around this. I get a little bit nervous. It did dip below 90 as well, but it swung between 89 and 105-ish here. Hopefully it does moderate out. I don't know. Maybe Boeing will go to zero. I don't know. I don't think so, but who knows? We'll see. Could it go to 20? I don't know. Maybe 80, 150. I don't know. Therein lies the beauty of buying a stock that is in some real financial trouble right now. They're burning through cash, and they need to get to the other side where they can start to generate the money machine again, and they will. I have no doubt in my mind. I wouldn't have put my money into a company that I didn't have just about as much confidence that I need that they're going to come out the other side and do quite well. And there's very, very few companies that I would do that with. Very, very few. Boeing is in a very, very unique position. There's one of two companies like Boeing in the world, Airbus and Boeing. I believe it's Airbus. I could be getting that wrong. The name of the other company does slip my mind. I know you guys know. Bargwarner. That's what's coming to my mind, but there's one of two anyway. And if you guys don't know, there's so many suppliers, 17,000 that contribute to the supply chain in Boeing. So it's extremely important. Could we just let them go? Yeah, we could let them go. All right, we could let them go. That's not an option. Not an option. So a company that can't fail, yeah, I'll put my money in there and we'll see what happens. You know, good on me. I don't need to come onto YouTube and declare that stuff, but I do. All right. Oh, Matt Money says, I disagree with you, Ryan, on Boeing. You're wrong. No, he says, I'm with you. I don't know. He's good. I want to use Matt as kind of an opportunity next. I would give it the fall at the very earliest of this year until 2021. I think we're going to be talking about a completely different oil market during those times. I just think the summer is going to be pretty interesting. Holy smokes. This is really never a dull moment in the stock market. And right now, energy is at the top of the list of the headline. As far as I'm concerned, energy is really, really tough right now. All right. CNBC says that they're suspending the dividend. Absolutely. They have to. There's no, I mean, it's $4.5 billion. They've got to put that money away. And if they suspend the dividend, which I don't care, I didn't buy the stock for the stupid dividend. I didn't buy it. But you don't. I knew it was in jeopardy. Anytime this happens, the company is, and hopefully they come out of it smarter. Look, I'm not saying that I agree with the share repurchases. I don't. I'm sure at the time they made the best decision that they possibly could, yada, yada, yada. But it's going to make companies, not just Boeing, think twice for that what if, holy crap event that happens. This is one of them. And again, to Boeing's defense, it's really difficult to blame them on an event that neither one of us in the community could have foresaw. You can't expect that Boeing would have foresaw this as well. And they got whacked with a double whammy with the 357 MAX. I believe it's the 357 MAX, I believe. But it's certainly a double whammy. And I think this might be it. I'm not going to call a bottom in Boeing, but you know, my position speaks loudly enough. Okay, good stuff. Agree, independence to the RCL. So yeah, this is kind of it's interesting, a sentiment play. So the cruise industry plays to different genres, and you know, Carnival is a little bit more of the party crowd. I think Gen X could probably use some of those nice thumbnails that he uses, some of those nice visuals to explain Carnival Cruise Lines. He knows what I'm talking about. A little bit more party, a little bit more younger crowd. I just think when you do that, you get a brand loyalty, and those folks will in fact grow up, whether or not they'll jump ship and go to a Norwegian cruise line, which I think is significantly of a nicer platform. Okay, I'm just saying. And that's all I'll say about that. And then Royal Caribbean, it's interesting enough. I have a lot of friends, and the consensus on Royal Caribbean, I never, ever get somebody come back and don't have the best things to say about their customer experience. So not only are the platforms that good, but the customer experience is quite good as well. So from a quality perspective, you know, you're going with the big one with Carnival, and then Royal Caribbean and Norwegian Cruise Line, I feel are the kind of the cream of the crop there as well. You know, Carnival as well being the biggest. I like AIDA. So they're not just going after the younger crowd, the AIDA ships as well. That are a smaller line. There's some of those cruises that you can get an exclusive suite. You know, you can pay $20,000 a month and just sail the world for months at a time, and they take care of you. Very, very high end. I mean, they have microbreweries on this thing. It's legit. It's really, really cool. But Carnival represents a lot of different brands, and that's why they have a lion's share of the market share in the cruise industry. And it is a play. Remember, we do have people who are aging and are demanding to spend their retirement having fun. And it's a lifestyle that a lot of people do prescribe to. So we'll kind of see what happens. It's kind of a play on that a little bit. I would put the hotel industry in the same category, Marriott and Hilton as well. Those look attractive here as well. So, you know, lots of value. Honestly, I was just in a position where I already had a lot of value, decided to take a little bit of a strategic stab, because I did have the growth stuff where I wanted, Uber looks good right here. Just to throw out, I mean, I could throw out 100 picks right now that look really good. The whole market looks freaking good. And that's why we got to boost it up to 80% right now to fill up some of those buy orders, because yeah, it's looking like it could be attractive. Is it a bottom? I don't know, but does it stand the potential of looking back on it and saying, wow, I was given quite an opportunity there? And the answer to that is going to be, well, what did you do about it? Or the question, back is going to be, hey, did you put a little bit of money to work? That's all. Did you put a little money to work? Not, hey, did you time it perfectly and get it at the very bottom? No, it's not about that. It's really not. It's about putting capital to work at the most opportune time. So I do think we're kind of there. All right. Swing trade. Yep. That's what I did. That was my game. Got lucky. I like Square a lot. Them at 56 months ago. Love it at 38 right now. What say you? Absolutely. Love the company. It's great. I've never owned Square. Currently, I do own a little bit of PayPal, and I do own Visa as a major holding. I'm not very confident on the others. I really don't like MasterCard at all, and I really don't like American Express a whole lot more than that. I know people would disagree with me there. I think Visa is phenomenal. As far as Square, a little bit more of an aggressive play. I do like it. I think it's great. I think it's a great pickup here on a discount for sure. It could be a doubler. Yeah, you bet. You bet. So if it suits your fancy, absolutely. I mean, I think Carnival Cruise Line could be a doubler or a tripler or a quad or a 5 times for me within good time. Now, am I going to be able to wait it out through those times? I'm going to try. I want to see how things pan out with their earnings, see how bookings start to increase again. The cruise industry was really, really looking good, as were the airlines in January. Balance sheets, everything looked really, really good. The industry was strong. Travel was up. Fares were up. Things were going quite well. And this kind of came out of nowhere. So, yeah, I mean, that's my thought on that for sure. Square's good in my mind. It's a company that I've never owned, but it does look attractive right here. It's so hard to think of savings to buy stock. Sure. Feeling excited to buy, but don't want to be too greedy. Absolutely. And you said a lot there, and kind of depends on a lot of different things, taking into consideration if you were saving for this moment or if you were just saving to save. Then the strategic goal for that savings wasn't to invest during a volatile downturn. Mine was. So, make sure that your strategic goal for that money, if it was to continue to save. There's nothing wrong with that. The fundamental lesson that everybody takes away from my channel is that all too often it's very, very easy to scoff at the notion of having some cash in the bank. And I'm not one of those guys that come onto YouTube and say, hey, I told you so. Look at me. I'm the greatest of the great. I don't do that. But for me, what makes sense is to have a cash buffer. You don't think for me it's easier to watch my retirement accounts adjust back when I've got a lot of different layers of 401k, cash savings, college fundings for the kids, all kinds of different layers, which makes it easier for me to rationalize the exposure that I have to the market. That's what it means to me. And I won't change in my philosophy. I get the arguments against, I really do, but I think all too often people prescribe to investing absolutely every penny that they have. You can get away with it as long as you have the proper risk tolerance to keep everything invested, and then to go through a downturn like this and be frustrated maybe that you don't have any dry powder to put to work. I just think, it just makes sense to me. And for the people that hear me will understand, and they'll probably be wiser for it. Again, there are some things you can do to earn a little bit of a few points. But again, geez Louise, $100,000 at 2%, is it really worth a couple $1,000s to tie that money up into a CD, for example? High interest savings account, I do like that option. That's a good one. But those are taxable earnings as well, guys. So, something to kind of think about. It's the liquidity that means everything to me. The ability to on a dime go pick up that money, and it's there, and I know it's there. It's my sleep easy money. It's totally fine, and it allows me to fight another day. Those are hard-earned dollars, and I don't want to see those go to risk. Not right here. I'm good. I'm good with my risk. I gave myself a little bit of freedom to where when the market was at an all-time high, I was in third gear. Okay. It gave me an upshift to fourth, fifth, and now I'm in sixth gear. I'm good. All right. I'm right close to the overdrive, the red line. I'm good. I'm right where I need to be down at these levels at 19,000 on the Dow. We're good. I'm good. All right. Good stuff. Oh, I saw a Carnival post on Facebook that they're offering some of their ships to be used as quarantines. Absolutely. I really applaud this effort. And I didn't see it with Carnival, but I had this idea for some of the hotels that are actually usually right adjacent. If you look at the hospital right there in Lower Manhattan, every major hotel is right there. Hotel bookings are down. You don't think that there couldn't be a subsidy provided? We have the property, guys, a subsidy provided to quarantine some folks in some hotel spaces. Why not? Need to think big. All right. Think big. I got minds and motions. Hello, guys. Appreciate you popping in here for sure. I'm going to go a couple more minutes to try to get through and make at least a little bit of a respectable dent into some of these questions. Obviously, a couple visitors kind of set me behind on some of these questions, but now I'm going to start to cherry pick so I don't go a whole lot over 2 hours. I will take this opportunity while I'm scanning at the same time to thank the channel creators. I want to thank my two guests for coming on. Kyle's always good for a visit. You guys don't hesitate. I always hesitate on JMac's channel because I don't want to be that guy that just comes on every Wednesday, but I would and I could. Guys, if you're a channel creator, if you're a subscriber, I think you'll get more out of the opportunity if you take the opportunity that we're posing. Good on us for proposing the opportunity, but good on you guys for taking us up on it and coming on and spending some of your time actually talking in person and giving some of your opinions. That was pretty awesome. Some things that Joe said tonight, man, as a new investor, I thought that was pretty awesome. It brought me back, kind of reminded me to how I was, back then. But certainly also tells me how much we can evolve in our investing approach and philosophy. Pretty awesome. So there's a long comment here. I took my chances and bought into Norwegian Cruise Lines as they are the only of the top three that had no reported cases of coronavirus. Right. So they weren't affected at all. They run a pretty awesome program there, man. I can say that. So pretty impressive. And I agree with you there. I think my pulse of why I took the position was partially along those lines. I think it spoke to a more broader perspective on what type of theme and what type of genre of personnel or patron they're looking to accommodate for. Yeah, it's awesome. It's an awesome line. The ships are incredible. So time to go ham. Right on. We're going spam. We're going spam. Anybody got any spam right now in their cupboard? You got to have some Hormel spam, man. You got to support that. And some Goya beans. Got to have some Goya beans. That's a private company. Goya. It's a good one. If they ever went public, man, we'd be all over that. Be awesome. Most retail, airlines, cruise and travel is a no. Yeah. So I heard you say that, Jay, on the Wednesday live stream. And I think it's awesome. I think we need to be more open with just saying, hey, here's what I'm thinking. It's either a no or a yes. Here's what I'm not thinking. Just quite frankly, as open as I am with saying, hey, here's what I'm thinking. To each his own. If you don't feel comfortable and you stay back and you don't put a position in, the stock's going to do one of two things. Either it's going to go down or it's going to go up. If you look at that and say, was I a little too conservative or did my thoughts or intuition pay off for that? That's some of the deliberation, but I like the hard move. I like the hard posture on your on your perspective and saying, you know, it's just not for me right now. Maybe I've got a little depreciation in the two accounts, and I don't want to take on that level of risk, right? So it's to each his own. And good on you, Jason. You know, you don't always have to, you don't have to do what's right for you is the point of that. I really like it. So REITs are down. I was just looking at for sure. That's what I saw. Took a little crack at it today, scanning through. For sure. Got Jamie here. It's awesome. Thanks for coming on. Appreciate it. Don't forget about the gas for too long. This gas with the ethanol in it, it doesn't hold up for long. Yeah, no, I know. Absolutely. Good point. All right. Saudi is hemorrhaging. They sure are to run at this pace. Absolutely. That's one of the smartest comments. I'm glad I got to it. I could show it to the group here for anybody who's in here at 2:04. Saudi is hemorrhaging cash. They can't operate like this, but you know, they don't care. You know what their deal is. They're going to drive it into the ground. They don't care. And Russia's saying, let's play. That's what's going on. Pretty awesome. I've been invested money every day for the last 2 weeks, and my total account balance is still in the same neighborhood. It's like the market is sucking me. Nah, I think that move right there will probably pay off, Anthony. I think you'll find that validation will come. And I'm not saying you need to be persistent with that, or if you're planning to be persistent, awesome. I think you could be okay either way. But yeah, I think you'll get that validation within due time on that program for sure. I think that's important. All right. Anyway, good stuff. Very cool. Very cool. 68 here. We're Oregon. Very cool. All right, guys, I may wrap it up tonight. I really appreciate it. Obviously, an interesting time in the investing game. I'll certainly close it out. If you do feel like you want to support the channel, and hit the thumbs up button. If you don't, that's fine too. If I've irritated you tonight and that this will be your last live stream, I do apologize for your first and last appearance on the channel. I typically don't like to beat around the bush. I'll give you my opinion. I think way too many people are like sheep, and they do follow as opposed to just speaking their mind a little bit. I think we need to be a little bit more open to opinions about what people are doing. It's really interesting to me. I'm typically not one of those folks that would come on to another channel and say, hey, you're doing this wrong, or you're doing this right, or hey, you need to do this a different way. I don't even think like that. I just don't care, to be honest with you. The only one I really care about with regard to the dollars that I'm putting to work are mine. That's it. And if you can take some of the playbook away from the way I look at the market and approach it, then good on you. You'll be wiser for it. You really, really will. No matter what size of portfolio you're working with. Okay, guys. So with that, I will go ahead and sign off here, man. It's been a longer stream tonight. Thanks for sticking around with me. We'll reconvene again next Friday as well. Keep your ears open for a Monday alert. I may do that. I may not. We will see how I feel, what kind of time permits for next week. But with that, guys, thanks again for the guests that came on. And thanks to you guys for making it another successful live stream for me tonight. I really appreciate your support. Really do. Awesome stuff. Thank you so much. And we'll catch you next week. Be well, guys.